For years, one federal agency had your back on your credit report, your debt collectors, and your bank fees. In 2026, that agency is frozen. So if a company wrongs you today, the office you were supposed to call is barely answering. If you assume somebody in Washington was still fighting for your credit, the last year and a half quietly changed that. So if the CFPB has gone silent, who is actually protecting your credit right now? Meet Donna. A credit bureau dropped an error onto her report. She wanted to fight it, and the agency she would once have called is sitting frozen. Today we follow Donna through what happened and the 4 moves that get her protected anyway. Here is the part to hold on for. The most reassuring thing, what still protects your credit in 2026, comes later. Stay past the 5-minute mark, because that is where the protections nobody repealed do the most work. Part 1. What actually happened to the CFPB? The Consumer Financial Protection Bureau, the CFPB, was created after the 2008 financial crisis to watch banks, lenders, and debt collectors on behalf of regular people. Then across 2025 and 2026, that changed sharply. The short version, the CFPB is still standing on paper, but it has gone largely dormant. Around March of 2026, leadership moved to cut roughly 53% of the agency's staff through a reduction in force. A court froze that plan pending a Senate-confirmed director. So it sits in limbo, not shut down, but not doing much. On June 11, 2026, Brian Johnson was nominated to lead the CFPB as its director. As of the middle of July, that nomination is still waiting on the Senate, and here's the part you can actually feel. In 2026, the CFPB has brought no notable new enforcement actions. The agency has stepped back into a deregulatory posture. Dana assumed that if a company broke the rules, this agency would go after them. In 2026, that is shaky. Part 2, the rules that died. Because it is not just that the agency went quiet. Several specific protections it wrote are now gone. 3 rules that were supposed to save you money are no longer in force. First, the credit card late fee rule. The CFPB had capped many credit card late fees at $8. In April of 2025, a federal court vacated that rule, so the $8 cap is gone. Second, the medical debt rule. The CFPB had written a rule to keep most medical debt off your credit reports. In July of 2025, a federal court vacated that one too, so medical debt can again appear on your credit reports. Third, the overdraft rule. The CFPB had moved to tighten overdraft fees at large banks. In May of 2025, Congress used the Congressional Review Act to nullify it, so those tighter limits never took hold. Late fees, medical debt, overdraft. 3 protections, all rolled back inside about a year. There is one more worth naming. The Open Banking Rule, Section 1033, meant to let you move your own banking data between providers, has been enjoined by a court and sent back for reconsideration, so its future is unsettled. Quick pause. If this is the kind of clear, no-nonsense consumer rights breakdown you wish somebody had shown you sooner, hit like and drop a comment below. I read every comment and reply personally. Share this with family and friends who need to see it, and don't forget to subscribe because we put out several new videos every week. Drop a comment and tell me one thing you have always wondered about your credit report or a debt collector. I am reading through them and answering. Part 3, what still protects you? This is the good news, and it is bigger than most people realize. The agency got quiet. The core laws did not go anywhere. Here is what a lot of coverage skips. The CFPB enforces rules, but it did not create most of your credit rights. They come from acts of Congress still on the books. Start with the Fair Credit Reporting Act, the FCRA. This is the federal law that governs your credit reports. It gives you the right to see your reports, dispute what you believe is wrong, and have errors investigated and corrected. It is still the law in 2026. Then the Fair Debt Collection Practices Act, the FDCPA. This federal law limits what debt collectors can do. They cannot harass you, they cannot lie about what you owe, and they have to verify a debt when you ask in writing. Still the law, still enforceable. And here is the key point. You do not need the CFPB to be active to use these laws. Both laws let you, the individual, file a private lawsuit when a company violates your rights. If a company keeps reporting a debt you disputed and proved was wrong, or a collector harasses you, you can take them to court for damages and attorney fees. Your state also has an attorney general, and many states have their own consumer protection laws. State attorneys general do bring cases against furnishers and collectors, so there is still enforcement at the state level. So the referee stepped back, but the rulebook is still in play. The free tools also stand. Annualcreditreport.com still gives you free copies of your credit reports from the 3 major bureaus, and you can still place a credit freeze for free, which blocks new accounts from being opened in your name. Part 4. Your 4 moves now. Concrete steps you can take this week, no agency required. 4 moves. Pull your reports, dispute in writing, freeze your credit, and keep records. Move 1. Pull your credit reports. Go to annualcreditreport.com, the official free site, and pull all 3 bureaus. Read them line by line. Look for accounts you do not recognize, balances that are wrong, and debts that should not be there, including old medical debt now that it can reappear. Move 2. Dispute in writing. If you find an error, dispute it in writing, not just by phone. Under the Fair Credit Reporting Act, both the credit bureau and the company that reported the information have to investigate. Be specific, include copies that back you up, and keep proof of the date. Move 3. Freeze your credit. A credit freeze is free at each of the 3 bureaus, and it stops new lenders from pulling your file. One of the strongest ways to block someone opening an account in your name. You can lift it anytime you want new credit. With a watchdog quieter, doing this yourself matters more. Move 4. Keep records and know when to call a lawyer. Save your letters, reports, and any messages from collectors, all with dates. If a collector breaks the rules or a company keeps reporting bad information after you disputed it, that is when a consumer protection attorney comes in. Many take these cases because the law can make the other side pay the fees, which is how Dana got her error removed. The agency going quiet does not make you powerless. It just means you are the one who has to move first. All right, let's lock this in. 1. The CFPB has gone largely dormant in 2026, with a frozen staff cut, a nominee waiting on the Senate, and no notable new enforcement. 2. Several of its rules are gone: the $8 late fee cap, the medical debt reporting rule, and the tighter overdraft limits. 3. The core laws, the Fair Credit Reporting Act and the Fair Debt Collection Practices Act, are still in force, and you can enforce them yourself or through your state attorney general. 4. Pull your reports, dispute in writing, freeze your credit, and keep records. Less watchdog, same rights, and a lot more that lands on you to actually use them. None of this is about panic. The protections that matter most are still yours, and they work best when you use them on purpose. If this helped you, give it a like and drop a comment below. I read every single comment and reply personally to your questions. Send this to family and friends who need to see it, and make sure you subscribe, because we put out several new videos every week. And the next video you should watch is our step-by-step breakdown of how to dispute an error on your credit report and actually win. With the referee gone, this matters more than ever. Make sure to subscribe so you don't miss it. It'll be uploaded within the next 2 days. See you there.